All right, so the next part of this whole process is understanding your credit report. You want to make sure that you completely can see through your report and know exactly how to evaluate it, just how the banks would evaluate it, okay? Because a lot of times you all are way too confident or not confident when it comes to your credit report. And there's a lot of misconceptions on what matters, what doesn't matter. And that's why I want to make sure we clarify that with you today. So when it comes to this process of, evaluating the report, obviously you're going to have, a bunch of different accounts that could be on your report. The more accounts that you have, a lot of times the better you can be, but sometimes it can actually hurt your chances if you have too many of the wrong type of accounts. Okay. So you have to understand, based off the type of funding that you want, you have to know exactly what you have to qualify, okay, from a credit perspective. Now, normally, most people, when you're first getting going with the business, you want to get credit cards. As I talked about in the first podcast, we want to have low revolving debt, okay? If you have high revolving debt, you're going to find yourself in a situation where a lot of credit cards are going to decline you, okay? Most of the banks will say no, because if you already have a high usage, then they don't want you to end up using that same card with them. Unfortunately, it doesn't make all that much sense to me a lot of times, just because they gave you the money. Now they penalize you for using it. So, that's its own story. But nonetheless, when you're trying to get, the highest limits, you want to make sure your revolving debt is low. So revolving debt is mostly credit card debt. Okay. So if you have, let's say, an average of, $50,000 in total credit cards, right? And in that process, you have maybe 40,000 of the 50 that's in high usage. That's considered high usage, okay? Meaning that you're using $40,000 of your 50K. So from the bank's perspective, you are looking like you're going to use that last 10K or possibly max out. So from the bank's perspective, they want you to always be in a situation where you have credit, but you don't need credit. Okay. Throughout personal, throughout business, that's the narrative that you want to have and keep. And that's also the hardest one to do at times, because we all know life happens. But when it comes to looking at your report, you have to make sure that everything matches, because if you don't do that, you will have problems, because you'll get pulled into bad offers, bad loans, and the wrong terms, or too long of terms or too short of terms, and interest rates that are just not ideal for your situation. So the other part of that is, when you go through looking at your report, if you see that you have late payments on your credit report, if you have collection items on your credit report, you want to get all that cleared up completely before you go for a large amount of funding. Now, let's say you have a situation where those late payments are 2 years ago. Okay. The late payments that are 2 years or older, those do not hurt your credit as bad as the most recent ones. All right. So when you're looking at late payments, let's say if it's a 5-year-old late payment, you don't have to feel horrible about it. Okay. That was 5 years ago. Now, will some lenders give you a problem about it? Maybe. But most likely, if they're asking you about a payment that was 5 years ago, they were probably going to decline you anyway, and they're just looking for a reason to say no, to be honest. Okay. So when you're looking at your credit report, those 2-year-old plus lates, fine. The recent lates are a big deal. Okay. So if you're in a situation where you got recent late payments, it's going to drastically affect how much you can get. Can you turn it around? Yes, by making on-time payments. Ideally, 6 on-time payments straight. Okay. That would help. A year of on-time payments straight would be way better, right? But when you have your file and you don't manage it right, or if you have a situation where your funds come in and from your job or business and it doesn't go to the right places, or maybe it just wasn't enough, you find yourself in these situations. We understand that, and we can help you kind of navigate the whole part of the credit and make sure you're in a better situation. But in the initial issue that you're looking at, you have to get those things cleared up. Okay, they cannot be on your credit report if you're trying to get a large amount of money, because what happens is when you're trying to get a larger amount, the banks will look at, well, they had a late 2 months ago, but they told me they make this high number of income. How is that possible? That would imply that you either forgot to pay your bill on time, or if you have several recent lates, then it looks like a pattern of inconsistency, and it makes the banks feel a lot less comfortable lending you a larger amount of money. So one late payment, let's say that payment was for $100, or if it was for $50, right? You may end up paying back anywhere between 50 to 100,000 when it comes to the losses that you got because you couldn't get approved for that card that was for 50K, or that loan that was for 50K, that line of credit that was for 100K, all because you were late for spending $100. Okay, so you have to understand, late payments can really put you in the hole. All right, so when some people are out here deciding, well, am I going to go out to eat with my friends, or am I going to pay my credit card bill? You have to pay the credit card bill, because that meal with the friends is going to cost you so much more than whatever the feeling is you have about disappointing them. I can guarantee you those same friends will be there the next time. And if they're not, let them go. All right. Because again, you got to make sure your financials are on point, because all these things are connected. The wrong people around your situation can really put you in a bind, because they'll influence you to spend money you weren't supposed to spend, do things you weren't supposed to do. And now you got collections on your account and they're looking at you like, why did you do that? This is the problem. Okay. So when you do this, you have to make sure that you're very disciplined. You cannot, and again, cannot get late, especially when you're trying to get large amounts of funding. All right. This is not an optional thing. This is not, oh, well, one time won't hurt. No, this is not going to work. So when you have those lates, it just takes you out the game, and it costs you way more money than whatever the bill was. So it's more important to pay it than to deal with the repercussions of everything you can't qualify for because you missed that payment. All right. Now, the next part of this process, of which when it comes to looking at your credit report, is also understanding when you have collection accounts. All collection accounts are not equal. As of January 7th, your favorite president, or lack thereof, did make a change when it comes to this process with the CFPB as well, when it comes to the medical bills. Okay, so if you have medical bills on your credit report, they're not supposed to be there. A lot of times those show up in the form of collections. Okay, so you may have a situation where you have like a LVNV funding or portfolio recovery. Accounts like that can report. Again, that's why you want to work with someone that can help you clear that up when it comes to getting those negatives off the report. Because again, if you're going to have a medical bill, which should have never been on your credit report in the first place, to be honest with you, because if you're trying to, get help, I don't know why you would get penalized for that whole process, because a lot of times you didn't plan on getting sick. You didn't plan on getting an accident. You didn't plan on breaking a leg, and now you're in this whole mess. So going back to the point, those medical bills shouldn't be on your credit report. So if you see them, there's already an issue. And those, a lot of times you can call the credit bureaus about that, or whoever put it on there, you need to tell them they've already violated your rights, because it's not necessary. Now, the other part of looking at your report is not just the collections or the lates, but it's also charged off accounts. So let's say you owe a larger bank, such as like a Navy Federal or Bank of America, Chase, and so forth. Those situations can be a lot more serious, because when you're trying to get those cleared off your credit report, particularly Navy Federal and Chase, Discover, Ally Bank, they're going to fight pretty hard to keep whatever negative accounts that you have on your report. So going back to why I said you want to make sure that you pay your bills on time as much as you possibly can. Now, is it easier said than done? Of course. And a lot of times, if you find yourself in a situation where you can't, then you got to work with someone like with us so we can kind of coach you through that process and give you the best strategy. All right. Because when you're looking at your report and you see these negative accounts, whether it be collections, late payments, or charged off accounts, those things have to be cleared up when it comes to getting lending. Now, it all depends on what type of lending. That's the interesting part. As we talked about in our previous podcast, the process with merchant cash advance loans, they will give you the money with your credit jacked up. So you can have all those lates and not even feel bad about it. All right. So you don't have to think twice. You can have a fresh late as of yesterday. Okay. And no one will stop you from getting the nonsense loans. But again, if you feel like paying daily or weekly, then that's up your prerogative. But again, look at what it cost you, because you might have owed $100. You might have owed $200 or $400, but now you're going to lose out on all the potential funding you could have gotten, or be forced into a situation where now your loan options are at the lowest level. So you have to take 1 day or 3 day options. Again, you'll be forced in situations where you'll have the lowest option. So you may have, 1 day or daily or weekly payments where you have to make, those payments on that. And now it puts you in a bind. So that's why, again, you have to make sure that you get this stuff done correctly, because if you don't, you will be, in a situation. All right. So when it comes to looking at your credit report, making sure all that stuff is good is always important. But let's switch over to the positive side. Okay. Let's say you don't have none of those issues. And let's say you just have maybe a high usage. Obviously, you want to get those credit cards down, like I said, to that under 20%, preferably 15 and below, ideally, for best results. But the other part of that is you may not have many accounts to begin with. So sometimes you can get fooled into thinking your score is higher than it is or better than it is, because you may have a 780, 750 score, but you may have 4 accounts on your credit report. All right. So a simple rule of thumb when it comes to looking at your report is factor in your age. Okay. So let's say you're between 18 to 25. In that time, you're probably not going to have a lot of credit. So if you have a good 5 accounts on your credit report, maybe 6 or 7, that'd be great. Okay. You're in a good situation at that 18 to 25 mark. From that 25 to let's say 35 mark, you really want to start to get anywhere between 10 to 15 accounts on your credit report. So that could be school loans, that could be credit cards, that could be auto loans, whatever. But you want to get that good mix. The more of a strong mix that you have when it comes to the different types of accounts that you pay and pay on time, the higher your chances are of getting approved for more money. Because from the bank's perspective, they got to see that you can handle each and every type of lending, whether it be for a mortgage, whether it be for a credit card or a regular personal loan, business loan, a line of credit, or whatever. So all of that matters in your process. So when you're thinking about it at that age group, you got to make sure that you start to build that up. Now, can you get approved with a little bit less? Yes. But again, you have to consider what type of approval you're asking for. Again, every time I talk to you, I'm going to make sure you go for the max, not for the minimum. Okay. Because now you can operate at the highest level. Now, when you get to that 35 to let's say 45, 50 mark, that's when you want to start to have 15 to 20 plus accounts on your credit. Okay. Now, if you have that at a younger age, even better, but you want to have a good amount of accounts and you want to have a mix of accounts. You do not want to have a bunch of credit cards only, or a bunch of auto loans only, or a bunch of houses only. Because some people would think, well, I have, 15 houses. I'm doing well for myself. You are. But when they look at lending, if you're applying for a revolving product, they look at revolving debt as well as your other debt, but especially your revolving debt. If you're getting an installment means a loan, right? A loan meaning cash given to you from the bank. Okay. If you're getting a loan, then they're going to look at your installment history. That's auto loans, that's mortgage loans, mostly personal loans, and how you've managed those, as well as your revolving debt. Okay. So when you're applying for a different type of loan product, you have to know what your strengths and weaknesses are. If you know you have a lot of recent loans, especially because if you have a lot of recent loans, you then have to look at how much income do you make? Do you make enough money from a bank's perspective to be able to afford the loan, your rent, your car note, and all your other monthly expenses? Because again, when we go through the process of getting the larger numbers, they're going to give you the option, not even really the option, they're going to pretty much make you do a personal financial statement. On that personal financial statement, you're going to have to list every type of account, all the debts you have, whether it be for credit cards, loans, lines of credit, all the above. Okay. So, and it's only on the personal side for that side. But when you provide that information, it's going to get pretty ugly if you don't have your stuff in order. So let's say you have a bunch of recent personal loans, and let's say those loan payments equal out to about $5,000 a month. Well, if you make $15,000 a month, and let's say your rent or mortgage is $3,000 or $4,000 a month, well, now you really only have, give or take, a good $5,000 to $7,000 a month extra. And if you have a credit card payments or a total of credit card payments that are equal up to about $1,200, then you have an auto loan that's another $1,000. Okay. Well, now you just keep lowering the number. So now when the bank looks at how much you can get approved for, they're factoring in what you actually have that's reflecting on your credit report, as well as what you put on that personal financial statement. So this is why this part is extremely important, because if you're trying to get approved for a larger amount of money, you have to understand what your weaknesses are on your credit and what your strengths are. Okay. So if you're trying to get a larger loan for your business and you have a bunch of current personal loan debt, it's going to be a little harder. All right. So you have to understand that in that situation, you may need to work on getting more credit card debt or credit card offers versus the personal loan offers. In the reverse, if you have a bunch of credit card debt, then you may need a personal loan to actually pay off some of the credit card debt, which is what I recommend a lot of our clients do. And we can assist you with that process, is paying off some of the personal credit cards you have. And then when your scores goes up, now we can help you get a lot more funding versus if you're in a situation where, hey, I got high credit card usage and my score is 650, but I want to get 500,000 in the next month. Makes the situation a lot more complicated. So all these different factors are all coming back to having your credit report as strong as possible. And the older you are, the higher the expectation is for you to have more accounts on your credit report. So if you're walking around and you have 1 or 2 or 3 accounts, you're going to have a problem, because now the banks know one of two things happen, or maybe 3. Either A, you cleaned your credit recently and they can't tell, or you don't use your credit, which is also a problem, because sometimes they're wondering, well, how are you going to use the credit when you have the opportunity? Because there's only so many references they can go off of when it comes to trusting you with a large amount of money. So what are they going to do? They're going to either decline you, give you a smaller amount to work with, so they take a smaller loss if you actually default. Okay. So this is the deeper level of underwriting that you have to understand, so you know why certain things happen and why they don't. So this is all relevant. Now, when you have the credit report strong and you do the things that are needed, you'll be able to get where you need to be. But you have to go ahead and get the coaching. That's why we come here and we help you to kind of go through that whole process so you understand it.